US dollar price.
Be right there. What's he doing? Is he talking? Is he talking? Bum, bum, bum. Hey, guten Morgen. Let me see if I can get this camera. Every morning I'm like, this camera is a little weird. Is it this one? I guess. What's the right zoom level, huh? Is that about right? Whoa, extreme close up. All right, good enough for the girls I go with. Hey, so good morning. My name is Wayne. Welcome to summer. Yeah, it's warm on the east coast of the United States of America, which is good. And so today we're going to cover technical analysis and fundamental analysis using TRADARS.com. And then we're going to look at execution with Trader's Way, trusted and ethical foreign exchange broker for our execution. Cool. If you work with us in combination, meaning you sign up at TRADARS.com, which is free, and then you set up a Trader's Way account through us for your execution, guess what? We have a special deal with Trader's Way. You get a little bit of your spread put back into your account. So it's like a narrower spread, but you get it in the form of cash. And it's real cash that you can withdraw. It's not just a little bit of equity. No. You get some cash back. Cool. Sweet. All built in. Just like that. Why? Well, because TRADARS loves you. I love you. You are my sweet baby. Cool. So anyways, that's what we're going to do today. And that's my story, and I'm sticking with it. So let me know what you want to cover today. Now, these sessions are really focused on a routine, not necessarily a signal. But I can help you make much better decisions. Stuff that took me, let's say, 90 minutes or even 9 minutes now takes 90 seconds. Yeah, pretty amazing. But it's not just saving you time, it's making better decisions based on fact. And that is epically cool. So that's our goal today. Help you go through your morning routine to focus on the right thing for today. Let's get a sit rep. Oh, look at this. He's calibrating. What the heck, Aiden? Hang on. Let's remedy that. Let's see if I can fix this right here. Yeah, we are constantly updating, but that shouldn't be. Let's see if we can get that fixed. So what he does, he meaning AI, named Aiden. It's not really a he, but Aiden looks at everything in the database and analyzes it, but also reads headline news as it's coming in. So he's watching hundreds of charts. He's looking at thousands of new economic data and then the trend in the economic data, and then watching dozens of different markets on different time frames and putting that all together into logic. Yeah. And now he's reading the headline news, so now he can get, what has just happened in the last 2 minutes versus what is the GDP in the UK. So it's kind of cool, man. Like, it's really cool. All right, he's recalibrating that. So we'll come back. So look at that, S&P 500 over the 7K mark. That is a record close yesterday. Record close. VIX 18. Fine. Bitcoin 74. Okay. Great. Fine. Gold 48. Fine. Look at WTI. Shut the back door. Below 90. Holy smokes. Dollars weak. Yields are about the same as yesterday. All right. We will come back to that. He's almost done the update. Let's get headline news.
Exclusive Iran proposes letting ships exit safely through Oman side of Hormuz, source says.
US dollar. Risk rally questions deeper downside. ING. Euro yen edges lower as higher. Eurozone inflation shifts focus to ECB signals.
Pound.US dollar price. Forecast rally halts near 61. 8% FIBO retracement at 1.3600. Oil prices rise on doubts. US-Iran peace talks will ease Hormuz disruption.
Australian dollar. Labour data steady as RBA watches CPI. TD securities. NGC US dollar has broken through the resistance of a falling wedge. It has touched this line at least twice in the last 16 days.
BTC US dollar appears to be approaching support, a potential opportunity.
Cool. Jobless claims. Interesting. So he's not doing the this analysis properly. First of all, he's not even supposed to do it on jobless claims. So I'll have to get back to it. Will weekly jobless claims move the market 200 points? No. So there's two things going on. One, he's not supposed to do that type of analysis for claims. And two, I just, my doubt is extreme. But we are, as you can see, we're working on it, which is good. He's making a few mistakes, we'll say. We'll call it mistakes. We'll get that all fixed later today. Is he going to do the sit rep? Yeah, here we go. I don't hear the audio. Muted. On. Interesting. I'm going to have to read it myself. Oh my God. All right, I'll have to do it myself in my own voice. Good morning. I am Aiden from TRADARS. Let us get you up to speed on this morning's massive sentiment pivot. Whoa, dude. Whoa, settle down. The global market has entered a powerful risk-on phase propelled by breakthrough in U.S.-Iran peace negotiations. Dude, you see? So he's reading the news. Think of it, it's AI. He doesn't just inherently know what's going on in the U.S.-Iran peace negotiations or that there's even a war. Remember, AI doesn't inherently know this stuff. So Aiden, is getting this information from TRADARS. AI just doesn't sit out there and sort of just access the internet. It's not really AI. So this, right, AIs are contained in their own bubbles. In this case, he's getting, in his bubble, Aiden is getting his news from TRADARS, which is cool. And then updates his thoughts on that, which is cool. Yeah, I noticed that. Yeah, so I'm not sure why. I just paid a what was it? $300. I think I'm paying $300 a week for the voices. Don't. Yeah, so I paid the bills. I think it's a little bit more than that. But anyways, we'll see why he's doing that. So anyways, okay, so the significantly lower geopolitical risk premiums. This optimism is being reflected in the bond market, where the 10-year yield has moderated to 2.82, and now it's even 2.74, okay, which is good, providing tailwinds, which is an old sailing metaphor, right? The wind blowing from behind you into your sails, carrying you forward in the direction you're trying to go. So that's a good thing. NASDAQ reached new record highs. Cool. Once again, he would have gotten that from the news. That's not how AI would read the chart. It doesn't really care about such things. Only humans would. What does that matter? Okay, biggest movers right now, U.S. oil, volatility index are down, Ethereum, Bitcoin, and silver are up. Boy, that sounds just like Aiden, huh? Cool. MoveOn.com. Wow. That's a big jump, huh? What were we yesterday? Just under 1. Now we're just over 2. Yeah. Yeah, baby. Yeah. VIX is down. That's good. Look at that. Down 32.5% from 30 days ago. Yeah, we have a comment here. Good morning, Wayne. Monthly targets have been met for Aussie buys. Yes, agreed. I covered that yesterday in our internal webinar. So we do multiple internal webinars per day, not just this YouTube live stream, but like today we have, so I'm doing this, then I believe David Pegler is doing one, then I believe I do one, then I believe Maida does one. That's all today. My goodness. So, yeah, so those targets were hit. Yep. So maybe a reversal might start earlier than usual. Well, we don't know if it's unusual to start now. We know there's a peak in the month of April. Yeah. So maybe it's totally normal. We have that in the database, by the way. But nonetheless, makes sense. Does it mean it has to reverse? Do we have to follow seasonality? No. And in this situation with war and all these other things, could it be different? It could be. But what I've seen, not just recently, but also throughout my career, it's amazing how often normality works. So I like to bet on normal. So yeah, I would definitely keep an eye open for that, Prince? Well, today is risk on, but we'll see. Got some Philly Fed, some speeches, some manufacturing. Japanese industrial production came out great. Look at that. Holy smokes. 3.8 versus -2. Good job, Japan. Anything else? Cool. What else? Lots of speeches today, huh? Holy smokes. Holy smokes. Busy day for central bankers. Get an eye on the markets. Nothing, many things not really moving. Oil down, NASDAQ up, Bitcoin up. Silver back up. Remember how bad silver was yesterday and the day before? And we were looking at it as a contrarian. But notice our score used to be like a 6, maybe a 5, and now it's a 1. Whoa. But up today. Gold up today. That's good. Let's take a closer look. NASI up, Nikkei up, S&P 500. Is it just not? That is likely just missing the price change. I'll take a look at that. Dow up, DAX up, FTSE up slightly, 0.3%. Okay. Yeah, okay. Aussie dollar, this is, so last night in our mark, where we plan our next day's trades, we did our analysis at TRADARS and came up with Aussie dollar and Aussie yen as the most likely trades. And we cooled off quite a bit on Kiwi, and these Kiwi pairs seem to be generally up, like Kiwi dollar, Kiwi Swissy, Kiwi yen, which was something we did at the beginning of the week. They're up today, but not nearly as much. And we looked very heavily at Aussie dollar and Aussie yen being our favorite trades, in particular Aussie dollar. And Aussie dollar is our biggest winner today. So we've been doing very well on that. And I'll show you how we made those decisions. I guess I can just do it now. Okay. Ooh, look at it update. Beautiful. Aussie is the best thing to be trading right now. And dollar and Swissy are about the same for selling. So the first thing that you would do is Aussie dollar long, Aussie Swissy long. Done. How long that? I just analyzed all of the Aussie charts. Aussie dollar, Aussie yen, Aussie Swissy. Actually, 3 of them. I need to get some more. Aussie dollar, Aussie Swissy, Aussie yen. Okay, I'll have them get some more pairs in there. But I just looked at all of those on all time frames. Done. And then I looked at dollar. I looked at US dollar. I looked at pound dollar. I looked at Aussie dollar. I looked at euro dollar. I looked at dollar yen. I looked at Kiwi dollar. I looked at USD CAD. And the other one that just keeps moving. All right. So I looked at all of those on multiple time frames. Cool. And from that determination, I can look at this page and go, Aussie dollar, Aussie Swissy up. Those are my best odds right now. Kiwi, we were really hot on Monday, and I think Tuesday it cooled off a little bit, and by Wednesday it was kind of moderate, and here we are, it's moderately bullish, but we've been watching that already. So there's a little bit of a comeback there. But this is one thing like in 90 seconds or less, in fact, probably 9 seconds. You know all the things you should be looking at and all the things you should be ignoring. Did you know? Check it out. Okay, Aussie Swissy, best opportunity. Aussie dollar, second best. Aussie yen, third best. Kiwi Swissy, fourth best. CAD Swissy, fifth best. After that, why do you need any more than that? You see, just like that. Trade that stuff long. This stuff, yeah, it's bearish, but it's not that bearish. Your best choice would be for bearishness, USD CAD, but it's a 0.41, which puts it somewhere in there. So you could if you wanted to. But you're selling this and buying that. Sometimes that messes things up mentally for a human being, right? To be long and short, even though it's the same trade. So you could just say, well, you know, there's no real difference between trading Kiwi dollar long than dollar CAD short. So it's your choice. Do you care? Whatever. But, you know, these numbers come from, you know, dozens of calculations being done in real time. I should also remind you that this is nothing to do with fundamental analysis. We have plenty of fundamentals. Oh, trust you me. This is just the charts. Dozens and dozens and dozens of charts. So you should start with these. Okay. Let's see if I can capture that. See, they keep changing because that's actually them changing price. Look at that. It's crazy, huh? All right. So that's everything with 0.5% or greater. So if you focus on anything but these, you're not looking at the right trades. Think about how quickly this can save you time, huh? It's like, well, when I ask you every day, so what are you trading, risk on or risk off? Again, what if you had the ability to look at dozens and dozens of assets across all asset classes so that you can see what investors are doing around the world throughout the entire financial market spectrum? Look at what they're doing and then analyzing the aggregate result of their conclusions for investing conditions. Long term, it's 7.8. Today, it's 2.02. Yesterday, it was lower. It was 0.94. Oh, just like that. So to answer the question, comes down to your time frame. So I asked you the poll, risk on or very risk on. No one, 4% risk off, no one very risk off. So right now, the difference between risk on and very risk on is just overall time frame. But if you answered something different from risk on or very risk on, so only 4% of you, but how you got to the risk off is your personal opinion. And even though your mommy told you you were special, you are not. And you're not aligned with the group. So we're looking at things quantitatively. We're looking at VIX, we're looking at oil, we're looking at S&P 500 traders, Bitcoin traders, Dow traders, junk bond traders, dollar traders, 210 spread in the yield curve. Well, what does that mean? Well, we track that. Investment grade bonds for those looking for safety, which is a heck of a lot different than junk bonds. See, junk bonds, risk. Investment grade bonds, safety, risk averse. 10-year yields, 2-year yields. We're looking at gold traders, Nazi, German traders, Japanese traders. We weight them all different. We look at these things over 3 time frames and weight them different. Guess what? That's right. Sometimes actually faster than that. Yeah. Okay, King? Yeah. Some things don't need to be updated faster than every 5 minutes, and some things are updated every second or every tick. Okay? So this helps us align the market. So for the 4% that said risk off, I don't know how you get that. You're guessing, or you're afraid. You're hiding in the basement with Grandpa Biden. And you might be right. Maybe the sky is falling. But I cannot prove it. You might be right. Maybe by the end of the day here, this is a negative number. And you'll say, aha, Wayne, I outsmarted you. I was right and you were wrong. Well, I can't be wrong because we're measuring the entire market. That is a fact. The market is risk on. It's not my opinion. I don't have an opinion. Why would you care about a YouTuber's opinion? Dude, right? Like if you're taking advice from a YouTuber, oh my God. Oh my God. Yeah. So don't take my word for it. Look at the math. So you might be right on today is risk off. It is 100% not risk off now. Yes, things may change, but you're guessing. You're trying to beat the market. I'm trying to read the market. I want to align my investments and my trades with the market. I want to go with the wave. I don't want to swim upstream, I want to jump in the current. So all I know is that is real. That is real. Now, maybe you disagree that I should pay a lot of attention to VIX, but, VIX correlates very well with a lot of assets, and it has to do with institutional investors hedging their exposure to the stock market by buying options to protect them from the downside. So you would only do that if you're afraid. And if you were not afraid, you wouldn't waste the money on your hedge. So I'm like, well, that's pretty important. And junk bonds. Are you buying junk bonds or selling junk bonds? Well, you're like, well, Wayne, I don't buy junk bonds. Well, neither do I. But we're looking at the junk bond market. And are they taking on risk or are they exiting risk? Are they going into lower risk investments like investment grade bonds instead of junk bonds? Where's the money going from investment grade bonds into junk bonds? Or is it going from junk bonds into investment grade bonds? So I want to watch not just the treasury market, but the actual bond market. And I want to look at the two constituencies, or at least the flow of capital into risk on or risk off. So I'm like, you know what? That's pretty important to know that stuff. Okay. Now, there's a lot of reasons to buy lower risk bonds. So we rate that an 8. That's not necessarily a sign of risk off of money going into there. Maybe just some people want that lower risk. But what's the good reason to put your money into junk bonds if you're afraid? Well, there's not. There's no, if you're afraid of market conditions, there's no way you'd make risky loans, right? There's just no way. There's only one way to read this. If junk bonds are going up, you're taking a risky bet. There's no doubt about it. So we rate that one higher. Smart, isn't it? Yeah, wicked smart. How about if NASDAQ dropped 3% today? Do you think that would have an impact? So we rate that pretty high. All right, so we did that. I am going to try to add some gold here. And yeah, some other assets if I can get them. Okay. This is cool, right? What is the Bank of Japan decision in April? 95% chance of no change. What about the Fed decision in June? 91% no change. What about the July Fed meeting? 80% chance no change. Isn't that cool? How many Fed cuts in the year of 2026? 61% no cuts. Okay. And 27% one cut. Some people even think 2 cuts. No way. Knuckleheads. When will the Fed cut if they cut? December. ECB. For the June ECB meeting, 58% chance no change. And a very small chance of a 25 basis point hike. So 23% chance of a hike, 58% chance of no change. Cool, right? Eurozone annual inflation, Chinese annual inflation, UK annual inflation, So I'm going to continue refining this, but it's kind of cool, isn't it? The question is, do you guys care? And then, if you care, are you actually going to use it, or is it gimmicky? Now, these are based on money, not opinions. Now, you can have an opinion, but if you don't put money behind it, I can't track it. So it's not a survey of what you think or how you feel. It's a survey of how money has been allocated. So it's clever. Let's see if he fixed this sit rep report. Even the fact that it's starting on mute. So he's changed something. I'll have to figure that out. Let me refresh. Yeah. Ah, interesting. Oh, something fun, something new to work on. Yay! Yeah. So earlier today, we looked at Aussie pairs being really good trades, and that was 100% technical. These scores are 80% fundamental. We do track trend, we do track momentum, and we do track the independent value of each currency and then compare them to each other, meaning 1.78 up favors Aussie over CAD. Okay, so that's a big score there. And so when we see the markets technically, Aussie strong. When we look at it fundamentally, we're like, Aussie, 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 Aussie on the upside. But also this is downside, Aussie and Aussie. Dude, so technically and fundamentally, there's no excuse for you to not be trading the Aussie. If you've been doing anything else over the last few days, you don't know what you're doing. You're trading the wrong thing. Now, I hope you're making money trading the wrong thing, but most likely is you could be making more money somewhere else. Okay? And that's the whole point. Trade the right thing at the right time for the right reason. There we go. All right, so this has been updated. Notice that it starts on Forex first. Then it goes into indices and other asset classes, and then it does crypto, and then it does 10-year. Cool. So what we're doing here is a lot of things, but for euro dollar, this is the rest of the year, and it printed out in advance. Isn't that nice? Yeah. Okay. No clear recovery between April and May. Which is cool. It's cool to know that there's no reliable, repeatable pattern in the transition from April to May for euro dollar. One way to think of it is in that period, they're both equally strong or equally weak. So you wouldn't have amazing expectations for euro dollar up or euro dollar down between now and next month. So if you think about it, what do we got? 2 more weeks, 3 more weeks in April, and then we have May is a long month, could be a 5-week month. So we're already tracking sort of somewhere between 5 and 8 weeks in advance. We already have a sense of the pattern. Yeah. And so April and May, and then June, July, August, September. Whoa, 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 whoa. Well, we already have all that plotted out. It's really cool, man. Cool beans. How would you feel if you had the annual prediction for not just the direction, but the magnitude and the volatility and the seasonality of the year in advance, right? It's kind of neat, huh? It's mathy. It's a very mathy thing. But I very successfully, in my humble opinion, taught Aiden the variables of which I believe are important to doing an outlook like that. Not just a quarterly, but an annual. We had to do a lot of macroeconomic stuff. We had to do a lot of technical analysis stuff. We had to do a lot of seasonality stuff. Okay. And so many calculations are being made. But what's interesting is when I gave him what I thought would be the variables that would be important for making such an outlook in the way that I do it, because remember, the goal of our large language model is what would Wayne think, what would Wayne do? And it's really interesting because I gave him the independent variables, and his large language model is based on relational mathematics, which is good. So I'm like, look at this thing, look at this thing, look at this thing, look at this thing, and look at this thing, and then look at the relationship between all of these individually, but as a collective, and then combine, again, combine all of these thought processes into a probable chart. Also include sort of the implied volatility inside of the confidence score, if you will, of how likely we would achieve that prediction throughout the year. But also, now it gets even more complicated, adjust for real world conditions every day. Meaning, look at the open, high, low, close of today, or yesterday, sorry, and the trend of that, so you can see and compare now, again, compare what has actually been happening with all these macroeconomic assumptions and with all the seasonal assumptions and with all these other assumptions and relationships and assumptions. Things like, when does VIX typically go up, and when VIX goes down, and then you have to look at the implied volatility relative to the normal VIX. And so, whoa. So now you get a sense of like, it's crazy level math. And then when it was done, we put it all together, and he said, like, based on what you taught me, Wayne, this is what I think the S&P 500 will do this year. And you know what? That is what I think. And that's, if you want to think of it as being a social scientist, right? I taught a machine how to think the way I want it to think. And then I give it impossible levels of math. Now, as a human, I don't do the impossible levels of math. I have experiences that I dumb down, if you will, and get my human version of vague accuracy. Like that is what I think. But now, knowing that I taught a machine how to actually do the crazy math well beyond my personal math capabilities, and then it pops out, Aiden's price forecast for the S&P 500, and I'm like, dude, that is what I think. That is. Even if I'm wrong, it's wild to teach a machine to do crazy levels of math to produce my thought. That is my thought. This is my thought. Whoa! Yeah. Whoa! Dude, that's cray. Yeah. That is cray. So yeah, cool. So we got this for everything. Good to know, right? Yeah, good to know. So Aiden believes euro dollar is going to kind of drift now, slightly up and sideways, and a little June, July action. And then check this out. According to Aiden, check that out. Canada Day is peak euro dollar. Okay, with 100 pips of volatility in that month. Cool. See, the gray area is the implied vol. Yeah. The reason it's wider at the end is because those have greater assumptions based on mathematics versus up here, we know what has recently happened. Okay? But if you look at what's normal for euro dollar, 10-year average, January's up, and then it drops for 2 months, and then it rallies in April. You mean like this? It starts up, then it collapses, and then recovers? This is the 10-year averages, guys. January up, February down, March kind of flattish, April rally into May. And then May is modest. So this is how we get this data. But look what actually happened. Spot on, brother. Brothers and sisters, pump up the volume. Chicka, 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 chicka. Slim Shady. Yeah. Now going to technical analysis. Once again, we looked at our index radar. We looked at the asset score radar. So we've already checked technicals. We've checked fundamentals. We've checked seasonality. And when we go to the charts on the day trade, the best 3 assets to be long, Aussie dollar, Kiwi dollar, pound dollar. But maybe things are changing. We'll see. Go to the swing. Kiwi dollar, Aussie dollar, pound dollar. Gorgeous. So today at 4 p.m., I'm doing the swing trading group over at TRADARS. And believe you me, we'll probably focus on these things. Or you could say, well, Aussie's the strongest currency. So I just want to look at Aussie pairs. Yeah, that's smart. I would say you're smart to do that. And Aussie dollar up on the 4-hour. Yeah. Aussie yen up on the 4-hour. Aussie Swissy up on the 4-hour. What more do you want? There's nothing more to look at. Why do you need to look at more than that? Okay, there's the next 14 days. Ooh, is that a swing trade? How about Aussie yen? What does Aussie yen look like? We're getting close to the monthly, and it's flattening. Uh-oh, spaghetti-o. So even though it's technically still up, I like the fact that it's flattening out, because that's what I would think if I were me, that as we approach the monthly M4, monthly R2, that there would be some profit taking. Yeah, we already got that in. Good to know, huh? Yeah, I know it's good to know. Aussie Swissy, a little more up before we get to that zone. M4, R2 approaching. Okay. Not for another 30 pips. Okay. So if you don't know how to read this chart, let me help you. Let me get my handy dandy notebook. Okay. Delete. Okay. You see this line here? Okay. That's M2. M2, if you're a bull, is the best buying price you could pray for the month of April. And the target is up there. Now, in particular, the most reliable, repeatable pattern is if M2 is your bottom, your M4 is your target. Look at the projection. So probably next week, we'll get to that 56.48, or maybe it's today, maybe it's tomorrow. Okay. And bada bing, bada boom. Could be a profit taking. Wayne, do you remember the old money show? There's an old interview. Yeah, I used to do those interviews every show, which reminds me, I'm speaking in Dallas, Texas in May. I got to send you guys, and it's a money show. If you guys are going to be in Texas in May, you can come see me. I think they charge $200 or $300. But the rest of the show is free, I think, or cheap. Yeah, wait, there's nothing free, right? So I think you got to pay a little bit to get in to the general show. But then to see me, I think it's another $200 or $300. But whatever, I'll be in Texas. So could be a good opportunity for cocktails and cigars. Euro dollar, look how messy it is. Seasonally, that makes sense, huh? Aussie dollar, look at, we've made a higher high on the daily. Isn't that beautiful? Pound dollar, well, we're coming up to resistance. There's resistance. Well, let me use my tool. Let me use my drawing tool. There's resistance here. And then resistance there, right? Let me do this. But we're already above and on the Aussie dollar. So if all you had was price action, that would be the next leg up. Now, we know there's some concerns up there for profit taking. That's not necessarily price. Well, it's not price action. It's implied volatility. Implied volatility suggests that maybe Aussie dollar takes a little bit of a break. Well, maybe that's what the break looks like. Maybe we go to monthly R2, which is our more extreme target, and then there's a pullback, and it'll probably be a pullback to right around where we are now, and then up. But you want to check your seasonality. Cool, right? What about all the Aussie pairs? Beautiful, beautiful, beautiful. Interesting. That might actually be bottoming already. Pound dollar, it's trying. Aussie CAD. Wow, look at that one, huh? So with Aussie CAD, I would look at this worst case scenario as actually an opportunity. So I look at it this way: worst case scenario, and then up to best case scenario. This one, I'm worried about a double bottom. This one, I'm worried about a double bottom. Interesting. And it's because of, look at the linear projections. Even though this is clearly bearish, it's very interesting, the projections based on shorter term price action. So what I'd rather see is these projections pointed down. And we're not quite there yet. Well, that one's kind of cool. So down and then up. Cool. Dope. So did I miss anything? Tomorrow we get an update on the COT. Anything else? So this is now, this is later, this is later. So we got at least 3 more. I think David Pegler's doing one at 9:30. It was supposed to be yesterday, but I don't think he rescheduled it. So I'll have to show him how to do that, because when he reschedules, and then obviously it moves it to today, but I think it also sends out emails to those that are subscribed saying that he's shifted it. But whatever.